Hello, this is CryptoSnake, coming back to you with our first installment of the Trading Techniques series. For this video, I will be teaching you how to draw support and resistance lines, and how they can be used for trading in cryptocurrency and the stock market. Support and resistance is a predetermined price level in which the price will hold support when moving in a bullish pattern, or act as resistance when moving in a bearish pattern. Why is this useful? Well, this can help you determine where to place your buy-in prices or sell prices. If you are looking to enter a position and you see the price is dipping into what is known as no man's land, and you know where the support line is, you can place your buy order just above that line to get in the best possible position before a bounce. The inverse is also true. If you see a position moving up, but you don't know when to exit your position, exiting below a resistance line would produce the best possible gains before a potential dump off. So how do we know where support and resistance is? The answer is simple: history. The historical price chart of any coin will tell you exactly where prior support and resistance is. These lines will be respected throughout the entire coin's history. Let's see this in action. Here we have ADA Cardano on the 1 hour chart. What we are going to do is look back in the chart for positions where the price had consistently candlewicked below, but always bounced back to the price line. That is what's known as support. For the purpose of this technical analysis charting, we will need to use the horizontal line tool. We will place this horizontal line everywhere we see a repeated bounce back position, placing the line at the base of the candle wicks. Now that we have done that, let's go ahead in the time frame and see how well these lines are respected. As you can see, the past predicts the future, as these price points are normally held as support or resistance. In a bull trend, prior resistance becomes support. This means when the price breaks through the resistance level and bounces back down to it, it is very likely that it will use that price point as new support. This is what creates higher highs and higher lows. The opposite is also true. In a bear trend, prior support becomes resistance. This is what produces lower peaks and lower lows. When you finish drawing your support and resistance lines, you will produce what are called channels. The gaps in between these resistance and support lines are known as channels. These can be very helpful as a trader because if you see the price moving with bullish momentum and it smashes through a resistance line with conviction, it will likely ride up to the next resistance line. This allows you to gauge where you may want to take profit and your potential gains from a particular swing position. That's all there is to it to support and resistance lines. Now go ahead and practice this on your own chart and feel free to ask any questions in the comment section below. If you would like to find out more technical analysis and trading tips, check out our next video, how to use a stop loss. Also, please join us in my free Telegram group at t.me/cryptosnakepit for insight into my overview of the market, trading tips, advice, and sneak peeks at my personal entries and exits. Information on how to join in the description below. This is CryptoSnake, signing off.